Welcome to our webinar series. I hope you can hear me well, see me well. Let's just leave another minute or two for people to join. All right, and I'll share my screen in the meantime. All right, so welcome. So my name is Tatiana George. I'm the CEO and co-founder of Curium. Curium's sole purpose is to make your life easier and what we say, give insurance professionals superpowers. We take care of all things risk and compliance and every hardship associated with it. Today, the superpower that we're going to give you is knowledge. And what we've planned for you is, for our standards, a little bit dense because we've packed today's training with as much facts and as much interesting things as possible. We usually keep things very simple and very clear. We'll attempt to do the same today, but just warning you, understanding laws, interpreting them, and also making sense of them for your organization is not quite as simple as possible. But we will provide you with as many tools and kind of simple guidance as possible. All right, so just kind of letting you know, we had the record number of people registering for this webinar. It's the highest number we've ever had, over 300. Usually not everybody of those who registers attends, but still I take it as you are interested in that topic. Please let us know what topics you'd like us to cover. And if you've got questions, don't wait until the end. Just pop them in and then we'll try to address them. Now, in terms of our agenda, it's very, very packed, and I will probably skip through a few things just to kind of get you the basics, but we'll see if we can manage to cover them or not. So we'll start with the sources of regulatory obligations. So where do they come from? Then we'll give you a few examples and criteria of which ones apply to you and how to know which ones apply to you, because that's usually one of the biggest questions. You hear about the new law and then you're like, well, does that apply to me and how? Then the next one is how to list and update them and what's a reasonable expectation of doing so. Then we'll show you a little bit of a sneak peek of the Curium way of how we do that. Just because, if I'm very honest, we haven't found a better way. So we kind of had to come up with the way ourselves. And finally, in the last bit, we're going to be talking about the effective management. And effective management comprises everything: controls, artifacts, tests, and so on. So depending on the time, that section might be a little light, but we'll see if I could give you at least the main points to take away from today. All right. So what are the sources of your regulatory obligations? And just for the record, we speak Australia only at this point. So in Australia, you need a license to conduct insurance business. And that insurance business goes from broking, distribution, dealing in insurance as an agency, providing claims as financial service, and so on and so forth. So on the left-hand side is an ever-growing list of regulators, and this is not an exhaustive list, of regulators who regulate the insurance industry. The most active ones are probably ASIC and APRA, and then recently also AFCA and the Office of the Australian Information Commissioner, just by the nature, you know, that there's a lot of privacy issues in the area. And on the right-hand side, you see examples of laws that regulate insurance business. However, not the entire law applies, and this is where it gets tricky. You need to pick the ones that apply to you and your type of license and your type of activity that you are doing. So, for example, an agency and a broker could have similar licenses. However, the types of activities that they'll be running, respectively, would mean that even the same law would apply differently to them. I'll give you examples as we go along. Okay, so most companies operating in insurance must have a financial services license. So the large APRA regulated insurers will have their APRA license, but everyone else who's not a large insurer still primarily must have a financial services license. So these are the examples of licenses that the activities that are permitted under the license that are typical to see in insurance. Providing financial product advice, general and or personal, dealing in a financial product, and providing insurance claim services. So some companies, and a lot of them, in fact, operate as authorized representatives of AFSL holders. So I'm pretty sure you know all that, so just repeating. Another source of your obligations, in addition to the laws, are the voluntary codes of conduct. And in Australia, roughly in insurance, there are 3 codes of conduct. There's one for general insurance, one for brokers, and one for life insurance. They are usually introducing standards that are slightly higher than the ones set out in the laws. And as I said, they're voluntary. Not everybody is a subscriber to them, but those who are will have an obligation to provide a copy of the code and must refer to it in all kinds of written or verbal communications with their clients. Okay, scope. So what determines what applies to you versus what doesn't apply to you? So what applies to you depends on the type of financial license and the activities that you are running as part of that license. It will also very strongly depend on the retail versus wholesale type of products and customers you're serving. Now, this one is quite a big one, and I'll explain why. So there's a very kind of big fear in the recent years, and it sometimes translates in reduced underwriting capacity in Australia because a lot of, especially international players, do not want to bear the risk of retail clients in Australia. And the reason for that is the bigger or larger amount of obligations that are associated with dealing with retail clients. On the next page, I'll show you the example, some of the examples, what sets apart a retail and a wholesale client. But in general, a lot of firms, and if you look at the laws and even the codes of conduct, they always distinguish between the retail and the wholesale. However, in practice, when you're dealing with clients, it's often very hard to say which one you're actually dealing with. So the broad definition from the Corporations Act defines a retail client as an individual or a small business with up to 20 people. However, for, let's say, a large industrial kind of production, it would be probably up to 100. But when you deal with somebody, it's very hard to say how many people do they have, how much money do they make, what's their turnover. You should know this, but it can change, and you don't always know the whole story. And if you're kind of counting on that, you know, a single definition to always be true, it's actually not always true. And so what a lot of firms do, what we find a good practice is when they set their obligations and the corresponding processes, they actually target them toward retail client. Even if there's a possibility of one being in your portfolio, the idea is to have everything set up to cater for those rather than to then be found that, you know, you've used a wholesale procedure for somebody who turned up to be a retail client. The next thing is the types of contract you're issuing, a consumer contract or not. Now, not everybody's issuing a contract. Usually insurers do, and sometimes agencies do. Brokers usually don't. So the Insurance Contracts Act does not apply directly to people who are not issuing the contracts. However, certain provisions of that act will apply to those who distribute and who manage those contracts. We'll get into detail again. And then partners you work with. So why is that relevant? It's actually very, very relevant. So let's say you're an underwriting agency or a brokerage, and you've got significant contracts with APRA-regulated entities. Now, everybody's speaking about CPS 230, and that single fact that you've got that contract somewhere actually gives you a sense that, for example, CPS 230, the Operational Risk Management Standard from APRA, will be applicable to your business through that contract. So it's very, very important to know who are you dealing with and what contracts you are bound by. And on the other side, there's your obligation to fulfill something that to someone else, and someone else needs to oversee you. And there's a different side of that medal is your obligation to oversee who you are dealing with. And that's partly enforced by this APRA standard, but not necessarily. A great example is authorized representatives. If you have authorized representatives in your business, you have quite a significant obligation to oversee and monitor them. So it works both ways. So who you work with and you deal with also defines your regulatory obligations. So let's keep going. So for everybody who wants or has a financial services license with ASIC, you must approve the scope of your activities with ASIC. One of the big kind of shifts in the last years, in 2021, when claims handling became a financial service, a lot of companies went and modified their license to add claims handling. And some of the steps they had to take, obviously, is to demonstrate that you've got adequate resources, people, and knowledge to run something like a claims function. And having a license, or if you look at, versus not having a license, and if you compare with representatives, one of the biggest differences is that if you have a license and if you're licensed to do these things, you must have a person called a responsible manager who has enough knowledge and who is operationally active in your business to actually run these activities in according to the financial services laws, the best practice, and understanding of the industry. In the last webinar, we've covered the differences between directors and responsible managers, so I'm not going to go into that, but if you've missed that, drop us a line and we'll share it with you. So just once again, what's the difference between somebody who has a license versus somebody who's an authorized representative of a license? So if you hold the license, you are accountable for every authorized representative you have. And it's your duty to supervise them. This is what I said. AFSL holders must have responsible managers. ARs, not. They don't have to have it. The next very, very large difference is AFSL holders must have adequate financial, human, and technological resources to maintain the business. And I know that sounds very vague, but it's actually quite a precise and a crucial obligation on the AFSL holders. So let's say if you do not have something as simple as antivirus software, or you're not able to provide cybersecurity to your authorized representatives or even to your own people, that can be deemed as a significant breach of this core obligation of yours. And you can't say, well, I didn't have the money or I didn't have the knowledge, because again, it's your obligation to do so. And finally, and that's a crucial one, risk management. So AFSL holders must run a risk management system. The law doesn't define what exactly and how exactly, but the ARs must not. They should be part of the risk management provided by the AFSL holder, but they don't actually have to have their own risk appetite statement and so on and so forth. And why this specific condition is important, because again, in the good spirit of CPS 230, or Operational Risk Management APRA standard, this is one of the critical artifacts that you will be able to show to your APRA regulated entities and say, okay, we do have, a running risk management in our company. So that is an important one. All right, next one, understanding the difference between retail and wholesale. This is what I told you. This is why a lot of large firms and capacity providers are struggling with Australia recently. So the spirit, the legal spirit of distinguishing is to protect simple consumers, so that when they buy something as complicated as a financial service, a policy, a PDS, that they understand what they've actually bought. And that is kind of the big spirit behind it. And then it translates into multiple different specific requirements. So the law is defined as a combination of the type of clients that you're serving. So they're small businesses and so on, but also some products. So for example, things like home, car, travel, and life insurance cannot be wholesale. I'm sure that there are schemes wholesale, but the majority of those products are retail and will be sold to retail clients. So what are the differences or the obligations, specific ones, that relate to retail clients? First, product disclosure statement. The law regulates pretty much everything. It regulates how it should be called, who can prepare it, how to share this information with ASIC, how to update it, who can update it, when to update it, what needs to be covered in it, and when it must be provided to the client. Now, if you remember, in the beginning, we said, what's the scope of that? So depending on what you do as part of your business, and depending if you're issuing a product disclosure statement or not, that same obligation will vary for you. So let's say if you are an agency, but you do not actually issue your product disclosure statement, but your insurer does, then most of these things will fall into the insurer's obligations. And yours kind of will be what's remaining, right? So for example, if you're selling directly to the clients, then you have to provide it to the client before they purchase the policy. For broker, it's very similar. Whilst they receive a PDS and they don't alter it or produce it, they must make sure that they provide the correct one, the correct PDS, correct version of the PDS, and at the correct time, which is before the client makes a purchase. Then provisions related to financial services guide. Again, everything's regulated. What's the title, when it must be given? Long story short, same thing. You have to give it before the client makes any purchase with you, and ideally it tells the client who you are, what are you allowed to do, what can you do for them, and who you are allowed to deal on behalf of. And this is a critical one, especially for brokers with complex binder arrangements, because it's not always clear, are you right now representing the client or are you representing the insurer? So the financial services guide is kind of determined to help customers navigate through those. And finally, target market determination. Now, that's just my personal experience. I find these the hardest. And I don't know if you remember, but I think that last year or this year, I'm kind of lost a little bit because it's the end of the year already. ASIC has issued a suspension order on quite a few pet insurance pet insurance products, citing that the target market determination were not up to standard and were not done correctly. Now, again, a target market determination has the idea of not allowing a consumer who's not in the target market to even buy the product. So to build those guardrails so that customers who are not designed for a certain product or not defined as a target market by insurers, that should not even obtain the product. Your biggest kind of risk with that, and it depends again who you are. If you're an insurer, the target market determination, you have to write it and then you have to update it. And then you also have to create those guardrails to say, how can you demonstrate that a client who's not in cannot even buy it? And that's really hard. A very similar composition of laws and rules and the interpretation then would apply to brokers and agencies. Even if they don't create that, they must make sure that whoever they're selling to is inside the target market determination and not outside. And if somebody happens to buy this, then kind of it's a breach that needs to be communicated to the insurer immediately. I'll give you an example again from that ASIC stop order. So the reason they recalled the product was the fact that when the pet insurance was sold to people, it didn't say anything about vulnerability or kind of ability of the client to pay cash for the claim. And when a client went to the vet and then had to pay the bill on the spot versus like, you know, a lot of people are used with Medicare, claim it straight away through the Medicare card. The vet actually told them to pay everything upfront and then claim with the insurer. And that whole debate kind of escalated into the ASIC decision that the product was not described adequately enough, and that people who could not afford to pay a claim were still sold this product without any warning, you know, that they probably shouldn't be buying it or it's not fit for purpose for them. So as you can see, it can be quite a wide definition of it. And as I said, in my view, I find it very, very difficult. There's one exception to it, which is interesting. So for brokers who give general advice, they must adhere to the target market determination of each insurer and each policy. Don't forget that. But if you're providing personal advice, then you don't need to, because the personal advice in itself constitutes that you've done adequate research on the client and their needs to make sure that what they're buying is actually fit for purpose for them. So as you see, and there are other provisions, but we kind of, these three, they are the main ones why people think it's a lot more difficult to serve retail clients than wholesale clients. All right, I'll briefly touch upon that. What is a consumer insurance contract? So there's a Insurance Contracts Act from 1984 that defined it as a type of a contract between an insurer and an individual policyholder. Right. What I told you, in its essence, it's very similar to retail, but it's slightly different. And the Act regulates a slightly different aspect of it. So a retail client or a contract is not the same thing as consumer insurance one, but in essence, they're probably very close to each other. So examples would be home insurance, car insurance, health insurance. And I won't go into detail, it's quite a dense slide, but what are the obligations if the insurer produced a product that will fall under the definition of that consumer insurance contract? So first of all, the law is very much aimed to protect the client again, and to make sure that client has enough room to either withdraw the policy, for example, like cooling off period, that they can just go and, you know, cancel the policy if they didn't like it, and that whatever they received from the insurer is clear, transparent, that they understand it. And funnily enough, it's probably the only act that actually puts some obligation back on the policyholder. And this one needs to be reinforced by anyone, not just by insurers, but specifically also by brokers, is the duty of disclosure. So funnily enough, this act tells the customer that they must provide all information honestly and fairly, and anybody who's assisting in the sale must reinforce that and kind of give them additional support and explanation to what happens if you don't, you know, and what are your duties in this contract. So this is just kind of a very, very brief one. All right. Now, I did not prepare the poll, but I would want to ask you as an example, what do you think is the number of these different obligations that are applicable for the simplest and the smallest in scope ASIC license? So I'll give you a sense of it. It's probably around hundreds. So if you want to do the smallest and the most kind of mundane financial service in Australia, you're already looking, it's just laws, you're already looking at probably 100 different obligations from different laws. So it's pretty, it's a lot, and a lot of them are very technical. So now, how do you first know what applies, but also how do you list and update them, and where do they come from? So what we just walked through is laws and regulations, and we didn't go into the examples of the code. I have a feeling people actually really know them well, because they must receive a training on the code every year or two. But laws, I think, is the one thing that is kind of poorly covered in the broader sense of what people need to know. And same with significant contracts. Quite a bit, those significant contracts are not actually supervised centrally, or at least that's what we find quite a bit. So most companies operating in insurance will have all three of those. So they will definitely have the laws. They'll definitely have some form of code, not definitely voluntarily. And finally, they'll have some kind of a significant contract. Now, in your frameworks or whatever, we suggest that you list those in an obligations register. But also you need to think a little bit about how are you going to classify breaches of those and how are you going to track those. So in our view, what constitutes a law or a voluntary code, it's just a simple breach, and then it can be a reportable breach. So the one that you have to go and report to the adequate body. In terms of contract, you can also say something is a breach or a significant breach, but we would suggest that you separate that as a contractual breach for your kind of sanity, but also for you to know that you have to go and kind of speak to that party with which you had the contract. So it's even easier in your when you do your, like reporting on your incidents and breaches and so on, so you can separate those. So you don't kind of put the laws and the codes in the same bucket as the contracts. While we know, the consequences for breaching those two are very different. All right. So the laws have been changing, and these are just a few significant ones that have kind of shaken the industry in the last few years. So the big ones was the change to the compliance regulation, RG 271. And unfortunately, the format of reporting had kept changing until 2023. Then the General Insurance Code of Practice was updated in 21, and now it's being reviewed with a notion or expectation that it's going to be updated again, probably next year. Broker Code of Practice the same. It's 1 year kind of behind the General Insurance Code, but it will follow the same cycle, so it will be updated a bit later. Unfair contract terms, that was quite a big one. CPS 234 Information Security Standard. This one is fairly old by now, but one lesson that a lot of entities took from it is that people kind of waited until the very last minute, until the standard started officially to start doing something. And the reason I'm telling you that is because with the CPS 230, the operational risk management is not going to be the case anymore, because the regulators actually learned and they've given the industry longer consultation periods and longer preparation periods, as well as some scaling in who has to roll it out first. So the expectation for the new standards are actually that you are compliant on day one, that you're not still figuring it out. So, for example, for the CPS 230, the start date is in July, and I think for financial accountability regime, it's in March. So you kind of have to be ready by that time. And the big one was, as you know, claims as financial service. So a lot of firms had to get quite a bit of external expertise in-house to manage claims. And also, if if you're managing claims, just the number of breaches and the ways things can go wrong is kind of multiplying. And we've all been through the recent parliamentary inquiry, the Royal Commission on the Floods of 2022. So obviously, the managing and the handling of floods from the claims perspective was quite a significant part of it. So what's coming up? We've already touched upon some of them. Sustainability and climate risk reporting one. This is an interesting one. For most financial services firms, it's going to be probably a delayed implementation because it's also staged. So only very, very large entities will have to report starting from next year, but everyone else will kind of wait for it. So the lesson here is every time you've prepared your, perfect obligations register, the odds are, if you look at it 3 or 6 months down the line, it will probably not be up to date anymore. So that's the unfortunate message that I need to communicate with you, but you already know it. So now, how Well, whilst there is a lot of complexity, the laws are changing, things are, complicated. How do we suggest that you deal with it, and how do we understand this? And I'll show you a little bit. There's no page that I could fit it in, unfortunately, because the pages have only limited space and the laws are sometimes very, very large. But we kind of developed our own mantra or methodology of how to deal with this. So first thing first, you cannot abdicate from the accountability and the responsibility to know the laws. No matter if you have them listed or not, if you read them or not, you must comply with them. And when I say you, I don't mean just the directors and the responsible managers. As I said last week in the webinar, we kind of touched upon the specific obligations, but there's a large number of obligations that apply to everyday job of every person. They'll be slightly different, but I'll give you an example. A broker who is customer facing picks up the phone and only is allowed to provide general advice. So how do you make sure that that person does not overstep the boundary, even though that person only started yesterday and that's their first day on the job, right? So that's kind of the obligations and the laws that go to from the very top of your company to the very, very last person working on anything. And that's why, whilst not everybody needs to know all the laws, but inside of your firm, we believe you need to have at least a database of what they are. And it also shows you kind of what's in, what's out. So which ones apply to me, which ones don't. So the way we think about those, we have kind of built an obligations library for primary scopes of the financial services license, and we've defined it. And I'll give you a sense of it, because as I said, I could not find a slide to show it, but I'll show it to you right now in our systems. So inside of the obligations, in the database of the obligations, we have spelled out different laws where to find that specific sub-obligation, because, for example, Corporations Act clearly does not apply to your company in its entirety. But we have selected the specific section of each law. Often, for a specific section of each law, there will be some ASIC guidance, not always, but often there'll be some ASIC guidance. What we have provided also is the kind of link so you can read the actual source how this law is formulated in the legal database, not just us. And finally, what we've made kind of a very, very simple description of what does this obligation say and what it means in plain English, because it's really, really hard sometimes to read through a very, very dense text, and we don't blame anyone for not wanting to do this. But our purpose in the business and in insurance is to make things simpler, easier, and more transparent. And this is our way how to make it more transparent. And then finally, when you actually run your obligations, breaches, and so on, we have built a database of examples of breaches. Because often, even the very experienced professionals, they receive some kind of an incident and the description, and they sit there, and it might be so technical they wouldn't even recognize that it might be a breach of a certain law. So our kind of way of dealing with this is to provide you with all the source information, but also give you the tools, the human tools, to understand it and to manage it. And I know it's kind of, when we take people through this, we sometimes see like them getting overheated and stressed because the obligations are so dense. But there's no rule that would tell you can just, ignore it. So coming back to our slides, this is what we suggest. If you're serious about it, know what they are, have some simple way of describing them, and also using them. You have to actually use them pretty much on a daily basis. When you receive those incidents or breaches, you need to tell, what have I breached? do I need to tell someone? Now, what we've learned, and this is one of the hacks that we've learned over years, when you look at all of those endless obligations, so this morning we spoke with somebody and we've compiled the register for them and it had 262, I think, obligations. It's overwhelming and it's overpowering. So how do you deal with that complexity? How do you reduce the complexity for you? If you look at them and if you read them thoroughly, you'll find that majority of these obligations will fall into these big themes, okay? And depending on the type of business you're running, some of them will bear higher risk and some of them will obviously be not as important. But normally, obligations are covering conduct. So for anyone who's client facing, this is probably one of the top risks. So conduct means first fair, honest, and so on. That's kind of the big issue. And if somebody is not fair and engaging in, misconduct or fraud or something like that, it's a reportable breach to ASIC straight away. But in general, conduct is hard. And because we use emails, phones, we do personal meetings and so on, controlling everybody at all times is really hard. But it's kind of important, and there are many ways, so we're kind of jumping into controls. But first of all, understanding the obligations, the laws and the codes, and often the contracts, they're very clear about the conduct. And if it's a kind of willful, either negligence or kind of malicious intent, it's often, you could lose a license for that, or you could definitely lose a contract for that. That's one of the big ones. Then distribution. Distribution is usually how you are selling certain things and what you need to do. So for example, if you're doing marketing and sales materials, you shouldn't be saying, so for example, if you're a broker, you can't call yourself an insurer. Or if you're receiving a commission for something, you cannot say that you're impartial and independent. And to give you a sense of that, quite a lot of the regulatory checking of these things is actually automated. So there are bots scanning websites for these kind of things. Also, there are bots scanning websites for the versions of the PDS, because ASIC's got a register of all PDS versions and documents because they need to be submitted, and they could fairly easily determine if your own website has the wrong one. So distribution is not just that, it's also your customer journeys. And again, depending on how you distribute the policies, it can be either online, it can be in person, it can be via broker, but everything related to how people are buying the policy, and if it's a retail, a wholesale, and so on and so forth, certain things need to happen. Then notifications to ASIC and other regulators. So mostly this one is about the regular ones. Like submission of your compliance reports, or if you change a director and address and things like that, you have to let them know. And the big ones, we group them together, documents. And this is a really big one. Again, depending on what you are managing and what you're producing versus what you are receiving from others. Equally, you need to keep them up to date. You need to make sure they're available to your clients when they're available to your clients, meaning before the purchase. And for your own policies, it's a really good practice to update them once a year at least, or when something material changes. And those policies specifically would be privacy policy, customer vulnerability policy, compliance policy, and so on. But those policies are usually visible for your clients. They're on your website, and you kind of need to make sure that they're correct. Then a very separate one, we've kind of grouped it together, disputes. And this is really important, you know that. So this is internal dispute resolution and external dispute resolution, how it's regulated. Most companies are must be members of AFCA. So whenever you've got a dispute, you always need to provide your client with the escalation mechanism, explain their rights and what they can expect from you. And also the hardest one I find is to keep everything transparent and timely. So the RG 271, the ASIC regulation that regulates that, only gives you 30 days to respond, to resolve a complaint. And that's, in our view, the hardest. And that's why kind of when we originally started, we started with that because we found that to be the most effective way of helping people get on top of the, the piles and the to-do list and not to breach. The next one is financials. So different companies will have different rules, but effectively it's the accounting standards, is how to pay money, to which account, who is allowed to touch money versus not touch money, and so on. Next one is risk management. It's very big and important, but it's actually, in my view, very poorly described in the law. What exactly does that mean? And now that everybody's rushing to create or recreate their own frameworks, I find it kind of sometimes frustrating that there are not good examples out there. But effectively, it's about running a risk management. So not just the operational one, but also the financial one that covers the entire company. Next one, information security and data privacy. I think I don't need to keep talking about that. You all know what that means. Funnily enough, whilst this is probably one of the most work-intense areas for you to build and maintain controls of, the good thing about it, the automation levels on this one are pretty high. So you can actually have really, really good controls overseeing that, just kind of as, software running and things like that. Breach notifications. So again, depending on what you breached, you'll have to notify different regulators, and there are different timeframes. I'll give you an example. So let's say we spoke about the conduct before. Let's say you catch one of your employees going and, defrauding customers. I mean, it's a really horrible one, but let's say doing something really, really bad. So that in itself will classify as a significant breach, and you need to let ASIC know effectively as soon as you find out. Another example would be when you've got an issue that happened and you believe it's a breach of something that has to do with ASIC and your core obligations, but you're still investigating it. Let's say, I don't know, you've lost the customer data, or it kind of went somewhere, or you couldn't service your claims for an extended period of time because of the system down or something bad and big, but you're still trying to figure out why it happened, what's going on. So effectively still running an investigation. And if you've hit the 30th day of that and you still haven't figured out what happened, you must report it to ASIC. So you've got kind of the 30 days to investigate. And if you haven't finished it, you have to tell them. And it doesn't need to be even a big issue. It can even be a small thing, but it just pushes you to promptly resolve it. Then the next one would be vulnerability and financial hardship. Again, it's quite a big topic, especially recently in the last 2 years. It came up really big in the GIGOP 2022, and then also in the broker code, and also in the life insurance code. So it's an area that also saw quite a lot of new recommendations, and ASIC found, bad dealings across the industry. So I have a feeling this one will be strengthened over time. So you need to have provisions internally. How do you spot vulnerable customers, and what do you do to help them? How do you assist them? Then the next one is authorized representatives and other partners. So that's just general kind of oversight versus how do you oversee them? What are their responsibilities versus what are yours, and who needs to tell each other what? So let's say a broker code tells that an authorized representative must tell the AFSL holder within 5 days if there's a breach of the code, as an example. A similar thing would be slightly different, not an authorized representative, but the general insurance code tells, let's say, an underwriting agency that if they are aware of any breach or complaint, they must tell their security within 48 hours, 2 days. So there are different kind of aspects of that. Then resource adequacy, we did touch upon that briefly. So you can't claim, oh, because I didn't have enough money, people, or knowledge that I didn't do something. Unfortunately, you have to have adequate resources, and you have to make sure that whatever you've promised that you're going to do in your manuals, policies, staff training, any written documents, so whatever you said you're going to do, you actually have to have the resources to do it. I'll give you one example. The worst thing you can do by the regulator is to create a beautiful manual, create beautiful, beautiful processes in this and say, this is how I'm going to run this, and then not do it. And then claim, oh, I didn't have this or that to do it. So if you are ever audited or seriously get into scrutiny by someone, just be realistic about your document. If you promised something to someone, just do as you say, and that something to someone can be your internal memo or internal document, but as long as it's official and people have seen it and it's available, that becomes the source of truth. So what we strongly suggest you not to do is not to spend all of your time and money trying to create this beautiful looking documents and then kind of not use them. We'd rather say create not so beautiful documents, but make them realistic. Just commit to what you can realistically achieve versus to what there's no way for you to do, right? And finally, compliance with laws, codes, and SLAs. So just, I know it's a little bit same, but effectively there are certain provisions in certain laws that kind of refer to each other and say you must comply with them. Again, examples from the code, they will all say you must comply with financial services laws. So you have them in multiple different scenarios, but we just thought it's worth calling them out. Now, the presentation keeps going and it's quite long. Let me just pause for a second and have a look at the questions. So just give me 1 second. If you've got any questions, no questions here. And there's a chat. No, sorry, I guess so. No questions. So if you've got questions, just put them in here and then we'll keep going. All right. As I said before, material agreements are also sources of your obligations. And the way to look at them is, and again, we've kind of worked it out over years. So not every single paragraph of your material agreement is a binding obligation by far. But I'll give you a very typical one. Let's say you're an agency and we're talking about a binder agreement with an insurer. And whilst the JICOP will tell you, if there's a breach or a complaint, you must tell us within 48 hours. Your insurer will decide that this is not going to be 48 hours, but 24 hours for you. That's an enforceable one. And that's a different one, but it's very much binding for you. So once you've signed it, that's it. So I would have those specifically picked up separately. And we do this a lot for our clients. We go through them and we say, okay, this one is common sense, but this one actually has an extra work that's that you need to run on your behalf to make sure that you're compliant with it. Then what we say, add it to your obligations register, but treat them slightly differently. Still treat them as breaches, but just classify them as, let's say, contract breaches or delegated authority breach or something like that. So when you do your reporting, you're not kind of confusing, you're not comparing apples to oranges. Examples of those breaches: agency or binder agreements, service provider contracts, SLAs for sure, and other like large ones, reinsurance, outsourcing, and so on. Now, effective management. So in theory, and this is my favorite, compliance on a page. So any manual can fit actually into this single page, and they can be very long, but in essence, what you need to have in order to manage your obligations properly, you need to list your regulatory obligations, code obligations, and contract obligations. One. And then you need to list your risks. So you start with a risk appetite statement, and then you list the individual risks, okay? Then for each one of those, you build controls. Now, we could probably have a whole session on just the controls. But long story short, we believe less is more. So for an organization, let's say even 100 people or 200 people, you'll be looking at hundreds of obligations, and depending on how creative with your risks, tens of risks or maybe more. But what we say, have a limited number of controls. You can obviously go and do, control each one, but then you're very much risking to overpromise and underdeliver. So I'll give you an example of a really good control of a lot of those obligations and then potentially risks like conducts, distribution, sales, and so on, would be your audits, file audits. This is a very powerful one if you structure them right, and if you put the right information in there, you're actually more likely than not to have a good, working, reliable control that you can keep, monitoring and enhancing. And if you run it well, you will see that you'll pick up different incidents and breaches and complaints from it, but potentially were not registered by your staff before. So it's an interesting one. And then as you run these structured controls, I'll give another example of a control. I'll give an automated one. Not all of them are manual, but an automated one would be, let's say, a risk of somebody hacking into your internal systems, okay? So one way how to mitigate that risk would be to have a multi-factor authentication. And by now, I think it's standard in the industry, because we all know that humans are the problem, not systems. But a second, like a multi-factor authentication, actually reduces that risk quite a bit. So that would be an automated one, which is great. Another automated one would be if you have different organizations or different levels of information in your organization, and you don't want people to see each other's stuff, you segregate their access to, inside the software. For us, for example, we could segregate each AR, we could segregate insurer from an agency and so on, so they only see their own stuff, but that's an automated control. So ideally, you have a good portion of controls that are automated, and unfortunately, you'll still have quite a few that are manual. I'll give you another example, policy reviews. They'll have to be manual for quite a while. You can start automating some of them, but ideally, they should reflect the state of your business. Then incident breach management, this is our bread and butter. This is what we specialized in. This is what we're kind of very strong in the market. So what we suggest is you run it on a day-to-day basis and you avoid the snowballing effect by allowing people to log it simply and just kind of letting you know right there without overcomplicating. We suggest you not to overburden your staff with the technical knowledge of the laws, but with the common sense and applicable to their jobs. And only when they've logged it and let you know, then you can go and you appoint a person with a little more technical knowledge to go and assess it and find the obligation that it might refer to and kind of analyze it as a breach. And finally, test and enhance is, as you're running this formal process and as you find things go right or wrong, you can enhance the most classic example of that. Let's say you find out that you've kind of were missing a question in your file audit, you're missing one checkpoint, and you just add it in there. So that would be a good example of an enhancement. And then finally, the see something, say something is our bread and butter, and what we breathe. We suggest and encourage full transparency in the company to allow everyone, when they see something, to say something, to tell you, and to kind of create the culture where you welcome that. This is a simple way. How does your controls, how does your management of incidents and controls contribute to this obligation? How do your compliance works? So your customers, your employees, your partners, and so on, and your controls and tests give you something that is not right, that is an incident or a complaint. something that did not go as planned, then what you do, you assess it against the obligation. You say, okay, is there a law or a regulation that was breached? If yes, it's a breach. And if yes, how significant? Do I need to tell somebody? What do I need to do? How do I remediate? So you kind of put it into the assessment framework and kind of mitigation, risk mitigation, and so on. And the second thing you say, is there a risk associated with this thing that happened? And if there is a risk, so why did this thing happen? Are my controls not sufficient? What does it tell me about my controls? And if there's no risk, well, maybe I'm missing something that is crucial, right? Maybe I just don't have the right risk and kind of didn't even come across something before. So that's like an ongoing process. So, and the controls that I told you before, you link them both to obligations and risk. So they're kind of your formal guardrails, how you do that. Again, we all understand that not everybody's got, an army of people running these things. But at the same time, what we're saying, if you minimize the number of these and have them as a good proxy to cover all obligations and all risk, then you actually have a chance to run it well. And I know it's difficult. I'm not pretending that it's easy. Okay. Robust compliance framework covers this obligations. So what does it say? A requirement, a control. So what are you going to do to make sure that the business is adhering to that? A test of control, confirming that your control is actually working, and an artifact. So we have developed a cheat sheet for examples of controls and obligate and artifacts for every single of the hundreds of obligations, just to give people a sense. It's not enough to say, oh, I'm doing it, trust me, pinky promise. You actually have to demonstrate that you've done it. So you have to show people that you've kind of run something. So I do have kind of a few more slides, but they go into controls. I'll pause here for a second and just say, do we have any questions? It's a good time for you to ask because we only have 3 minutes left. Let me just check. Questions? Just type them in there. I've got one person here, but I think I can't unmute you. Ivan, do you mind typing in the question? I cannot unmute you. I'm sorry. Right. Allow mic. Sorry, let me try. No, I think it's not working. Do you want to try to do it in a chat? Apologies. I'll change the settings next time. Okay, if you want, just try putting it in the chat. I'll look into it in just a minute. But just to kind of give you a sense of it, I'll try to summarize it. If you look at the laws, there are many of them, and depending on what you do and what clients you deal with and who you work with, the scope of those will be slightly different for each one of you. Then in terms of internal organization, you'll have your directors, you'll have your responsible managers, and you'll have everyone else. And the laws will apply not very equally to you. So let's say if I'm running the claims function, clearly all provisions of different codes related to claims will apply to me, and the underwriting and the distribution won't. So depending on which part of the business you work with, you have to actually know certain bits of them. And again, we do quite a bit of training on that. And then finally, knowing is not enough. You can know, but then what do you do, right? So the good practice is, and I'll come back to this, the good practice is knowing. The demonstration that you know is to list them. And then the demonstration that you do something about it is effectively this control incident breach mechanism. So that's this ongoing, this kind of ongoing triangle. That's the best demonstration of how you're adhering to your stuff. And when things change, again, this is one of the hardest things that we found over years. Nobody's actually telling you. So again, we've built this database and we have the agreements with law firms to actually populate our clients' registers, push the relevant laws to them, and kind of suggest, that they need to address this and show them which ones are not applicable anymore. But it's a hard process. Even for us, it requires a lot of time and effort to actually do this. All right, so I'm gonna pause here in the presentation. Okay, no questions, sorry. All right. I'm gonna pause here. I'll give you a minute to ask a question. Somebody told me last time they were typing it and then I cut off the meeting. So I hope you like this. I think we're going to run one more webinar until, still in 2024, which is going to be what awaits you next year. So it's going to be, I believe, on the 10th of December. But otherwise, let us know if you have further questions, if you need any help. And also, we'd be happy to know which topics you would like us to cover for the future. No questions? And thank you so much. It's 101 in Sydney. Enjoy your day, and we'll see you next time.